Hello, and welcome everyone to today's PRI webinar, The Truth Behind Debit Card Profitability. We're excited to have you join us and hope you find it somewhat entertaining, but also very informative and educational. Today's flow is going to be the first half of our hour we get to spend together. Will be a presentation from our Director of Payments about debit card profitability. The next half, we've invited two of our favorite bankers over to have a panel discussion with us about that topic and talk about how they're implementing or deploying some strategies and tactics around increasing that profitability. So we think it should be great. Also, please note that at the top of the screen, there is a Q&A button. Should you want to submit any questions during the presentation or the open discussion, please do so by going to that button and putting them in there. We will attempt to address them when we get to the discussion portion, or at least some of them. Hopefully there's enough that we can't get to all of them. So, and with that, I'll go ahead and introduce our Director of Payments, Miss Candace DeBarger. Welcome, Candace. Good to see you. So, our Director of Payments, Candace, has, as you see on the screen, has had a 35+ year career really in payments. And much of that career was spent at MasterCard. And whether it was her time early on in her career, helping develop the rules and regulations of the Maestro interchange network, or later on in her career, leading the community institutions department for program management and relationship building with community institutions. Really, all of it was centered around increasing card profitability, whether it was increasing interchange income and tactics for that, whether it was decreasing expenses or improving the performance of the debit card portfolio. It was all around how to optimize the product and increase profitability. So I say all that to say, Candace comes with more than the requisite experience to provide and drive this presentation. So with that, Candace, I know you're going to give us an awesome presentation. I'll go ahead and hand the stage over to you.
Okay, thank you, Mike. And hello, everybody. I'm really happy to be here with you today. First, I'll say that I wish we were all in person. Giving a talk in person, I can see you laughing, hopefully. I can see you sleeping, hopefully not. On a webinar, there's absolutely no reaction whatsoever. I can't see your smiling faces and see if you're multitasking. So I'm just going to need you to know that at the end of every slide, I'm going to imagine each and every one of you laughing at all of my jokes and clapping wildly for any point that we make. So if I smile, that's what I'm imagining. We're going to talk about debit cards this morning. I'm going to talk about 5 different points in about 10 different slides, and hopefully, if all goes well, in 20 minutes. We're going to talk about why debit cards are important and what it means to actively manage your program. Why does your PIN network matter? We're going to talk about contactless cards. We'll also talk about surcharge-free ATM programs and really cash and ATMs in general. And last, everyone's favorite topic, fraud. You might actually be surprised by what I say about fraud. So here we go. The first thing to know is why debit cards matter. Debit cards are the physical manifestation of your brand. They are the primary channel by which consumers access their funds. What's most important to them, of anything after their family and friends, is their money. Incredibly important and a primary way for you to engage with your customers. Interchange revenue, what merchants pay you every time your cardholders make a purchase, is your #1 source of non-interest income. So often I talk with bankers and CEOs of community banks, and they came up through the lending channel. That's very common, nothing wrong with that, but they all tend to minimize debit cards until we have them look at their books and at their P&L. It's the #1 source of non-interest income. The graph at the bottom of the page is a financial example of this. So this is actual project results from a relatively small bank for whom we did a project. They're about $230 million in assets. And by making a small change to their what we call their network stacks, the networks in which they participated, they didn't reissue their cards, they didn't cause cardholder declines, and they didn't even make their back office work for it. They actually experienced an increase in revenue of 6 cents per transaction. That resulted in an increased value to them of $800,000 over 5 years. And that's a pretty small institution and a really nice boost to their project, to their bottom line for not really working hard for it. Let's first start with the graph on this page. This represents a 400 million-ish assets under management bank, and this is a graph of what they paid their debit card processor per transaction costs over the scope of 3 years. Through CPI increases, as well as some new fees that were snuck is maybe a terrible word, but were, put in over the years. In 3 years, their expenses went up 3 cents a transaction because they didn't look at their invoices. They didn't track their expenses on a per transaction basis. They just looked at the number, and as long as their interchange revenue was growing faster than their expenses, they were fine with that. But this was $80,000 more a year in expense that was completely controllable. So obviously, once we started the project with them, we got them back to now 4 years ago level. Your processor costs are negotiable. Probably all of you know that. Did you know that your PIN network costs are negotiable too? All of the PIN networks are competing with one another. They all want your business, and they'll do deals with you or with us if we're doing it for you. Also, Visa and MasterCard will give you incentives for committing to continue to do business with them or for moving from one brand to the other. Now, when we talk about moving from one brand to the other, most of you will go, oh my God, I don't want to do that. I don't want to reissue my cards. And I get it. I totally get it. But there are times when it's a good idea to reissue your cards and maybe change brands. Obviously, there are financial reasons to do that. Both Visa and MasterCard will make it worth your while. But what if you're going to contactless cards, as so many of you are? You have to reissue all your cards anyway. It's a great time to talk to Visa or MasterCard. There are other reasons why you're reissuing your cards. Some of you rebrand. An acquisition is the perfect time to talk to Visa and MasterCard, especially if it's one brand or the other. It's a great time to take the opportunity to make some money. One of the things I recommend to our card partner customers is to create a debit card P&L. Actually, with our card partner customers, we do it for them. We track about 60 different card metrics, as well as an all-in P&L every month, every quarter. We look at profitability per active card and per transaction. Why is that important? Because it helps us spot errors. Networks and processors are run by humans. And humans, we're all flawed, right? They make mistakes. You'd be surprised how many mistakes they make. So we look at that profitability per transaction, especially. That works for my brain better. We look at that to help us focus on where we need to look to spot the errors when we see something that isn't on trend. Additionally, at your institution, we need to hold someone accountable for both the revenue and the expense associated with the debit card program. What I see so often at community banks is that there's someone responsible for the expenses, like the deposit ops manager. Now, if there are any deposit ops managers on the phone, I'm sorry, but they're great at expenses, but often don't take the revenue into account. And we're going to talk about that when we get to fraud. So we need someone who's accountable, who can look at things from what's the revenue opportunity, as well as the opportunity to control expenses. And last, don't forget about marketing your debit card programs. Debit cards aren't set it and forget it. We need to especially when someone opens a checking account with your institution, we need to remind people about the benefits of using a debit card, convenience and control. Be wary if you are high up in the organization, be wary of that focus group of one. I'm the CEO of this bank and I use credit cards and no one uses debit cards. Well, a focus group of one can lead us astray. There are so many people without access to credit who need debit cards to either help them recover from a credit issue, or they don't have access to credit lines at all. So this is the only way they can manage your funds. And we need to continue to remind people of the value of debit cards. PIN networks. So let's first talk about the expense. And PIN networks is maybe a little bit of an old-timey phrase, but it's one that most of us all understand and know. So I'm going to continue to use it, and I hope you will forgive me. The bell curve graph on the left is our data. It is our database of all of our projects that we've run over the past few years, 200, 250 different data points. And it represents the distribution of the fees that our customers pay to their PIN networks. It's a very, very wide distribution. Not all PIN networks are created equal. That is a true statement. Some networks have very low fees, some have very high, and some are, of course, are in between. There is a wide range of expense structures, some fees that are on a per dollar basis, some fees that are flat, some fees that are per transaction. We've even seen that some networks try very hard for you not to be able to track your expenses. There is one network that reports their fees on a daily report. That daily report does not roll up to a monthly version. It is originally designed to send adjustment information, interchange adjustments, or even dispute resolution information to and from the bank. And those fees are hidden and they change the days on which those fees are passed through. So it's very difficult for this network's customers to track and understand how much they're paying. That's, of course, our job, and we can help with that. Last, important to know that you can change PIN networks without impacting your cardholders. We don't have to reissue our cards. We can do it without cardholder declines in general, unless someone makes a mistake, which humans are flawed, does happen on occasion, but there's very low risk. We can also do it without impacting our back office and the people who, do all the reconciliation and balancing. So I always say it's as easy as changing your shirt, which is a little, that's underselling it, but it is possible and it can be done, and the results are powerful. If we look from here to here, from lowest to highest fees, that's about, I calculated it for like a $400 million asset size institution. That's about $1 million a year in difference. So just to talk about the impact. Now let's talk about the revenue side. This is the same data set, but just looking at interchange revenue per transaction. It's a little bit of a wider distribution. But you can see, again, here, the lowest 21 cents per transaction, the highest like in the 80s. Now, this in the 80s was a primarily commercial institution whose customers were primarily small businesses that tend to spend more for every transaction. So to be fair, we can't get everybody up to that highest number. But what's important to understand is that your choice of PIN network actually matters in your overall revenue. And different PIN networks pair differently from Visa and MasterCard to create different income results. So a Pulse MasterCard issuer is going to, even with the same cardholders exhibiting the same behaviors at the same merchants, they're going to produce different revenue outcomes than a Pulse Visa issuer. And I'm not picking on Pulse, all the networks are the same. The other point is your processor may not be the only answer. Many processors own PIN networks. And just because your friend, the account manager, says that you should do business with their PIN network doesn't mean that you should. You might want to. Sometimes it's the right answer. It's not the only answer, and we should look at all of the options. The last point on this slide is that interchange revenue fluctuates regularly because your networks are competing against one another for your transactions. And when they compete, they do deals with merchants. Thanks to our dear friend Senator Durbin back in 2012, merchants won control of transaction routing. The only control you have is what networks in which you participate. So networks do deals with merchants. And when they do deals, probably many of you have heard me say this, they take money out of your pocket and they put it in the merchant pocket. Now, those deals are short-lived. They tend to be 1 year, 2 years, usually 1 year, right, in length. So we see a lot of this. We've seen 3 profound shifts since I've been here in the last 2 years. So don't commit to your PIN network for 10 years, even for 7. We really usually try and stay at 5 years, because just because one PIN network is the right answer today doesn't mean that it will be 5 years from now. Oh, fraud, my favorite topic. Here's a poll for all of you, an informal poll, and I'm going to imagine all of you raising your hand in response to my question. Who would like to know how to eliminate all of your fraud? Thank you, Mary. Okay, I had some people raising their hands. Thank you so much. I appreciate you. Here's how you eliminate all fraud. Decline all of your debit card transactions. That wasn't the answer you probably wanted, right? We could take fraud down to 0 by saying no to every single cardholder who tries to do a transaction. But imagine the consequences of that. Your call center is going to be deluged with calls. You're going to have customers taking their business elsewhere, right? Not only their debit card business, their checking account business, and their savings account, and their CD, and their loans, you name it. So fraud is a necessary evil of debit cards. We don't like it. No one likes it, but it's a necessary evil. And I will tell you, in my time here at PRI, in working with customers and looking at their fraud reports, never once have I told someone they need to lower their fraud rates. Never once. This graph on the left represents a very typical community bank fraud, right? You know, we look at fraud as a percentage of the purchase dollar volume spend. Never once have I said anything other than your fraud's too low, you're declining too many transactions. When we decline someone who is actually trying to transact, 1 in every 4 people who experiences that false decline, they're called, puts your card away, takes out another one, and never takes your card out again. So that's a big one, and probably not what you thought I was going to say. And if you want to challenge me, you can go ahead. I think my phone number is in the deck. You go ahead and call me and we'll talk about it. But in our panel discussion, if we get there, I can give you a real life example of this. Contactless cards. The first thing we hear is, oh my gosh, they're so expensive. And they are. I understand. But here's the thing. First of all the cool kids are doing it, right? All of the large financial institutions have moved to contactless cards. Many, if not most, community banks are in the process of doing so or have done so already. And if we can get someone to tap their cards, that's what we tap our contactless cards. We don't swipe it or insert it, we tap it. If we can get someone to tap 3 times, we convert them. And in general, a tapper is going to do more transactions per month, more places to use their card. It's less friction, it's faster. Consumers love it. So I urge you, if you have said no to contactless cards in the past, I urge you to think about it. Cash, ATMs, yuck. This is an interesting graph. It was a survey published by PSCU, and they actually were looking at mobile wallet usage, but I looked at the left-hand side, the cash. Pre-pandemic, 20% of people said cash was their preferred form of payment at the point of sale. Fast forward past the pandemic, and that number is down to 15, 16% because cash became dirty and germ-riddled. Consumers are not using cash more often. So the necessity for a surcharge-free ATM network that is often incredibly expensive has lessened over the years. It was important 20 years ago. It may not be so important now. So evaluate that surcharge-free ATM network. Sometimes it makes sense, by the way, and one of our bankers here does participate in the surcharge-free network, and we told her to stay in it. So it's not always the wrong answer, but sometimes we need to evaluate it and look at what's the opportunity to surcharge some of these customers using our ATM where today they don't pay a surcharge. You may be giving away significant revenue. All right, so, I'm 1 minute over. Wow, I tried hard. Okay, here's your key takeaways. Pay attention to your debit card program. Your processor, God bless them, we love them, but they're not always right. Consumers and their habits have changed from 20 years ago. Just because you did it 20 years ago doesn't mean you should do it now. And the last, most important, understand and track your debit card profitability. Okay, now I'm imagining all of you cheering and clapping your hands and smiling. I'm going to turn everything back over to my boss, Mike, and bring in the panel, and I can't wait to have further discussions.
Awesome. Thank you, Candace. As always, great presentation. I am not shocked, but I want to give you kudos for getting that done in 20 minutes, because if you and I had versions of that presentation that could go multiple hours. And
Yes.
Unfortunately, some have heard me do that. So fantastic job. It's always great and great information. Sometimes I'm guessing we will have more questions. We've had some already. I'm sure we created some thought and concerns maybe and questions too. So great job. So at this point, as we said at the beginning, we want to open up to a panel discussion, and we've invited two of our favorite bankers to come join us, and they so kindly said yes, and we're glad to have them here today. So I'll go ahead and bring them on now. And firstly, I would like to introduce to everyone the Executive Vice President and Chief Operating Officer of Equity Bank out of Wichita, Kansas, one Miss Julie Huber.
All right. Thank you, Mike. I appreciate your invitation to be here. We're a $5.4 billion bank based out of Wichita, Kansas. We have 70 plus locations in Kansas, Oklahoma, Missouri, and Arkansas. I'm Chief Operating Officer. I've been with the bank from the very beginning. I've done every role in the bank at this point, but today I have all of our operational units report to me. I have our customer care team, so our incoming calls for our call center, and I also have risk and compliance.
Awesome. Awesome. Thank you, Julie. We really appreciate you joining us. And I'm interested, every time we have one of our community banker friends come join us and they talk about how they've been almost everywhere or everywhere in the bank, I always wonder, just like Candace was wondering with hands, how many hands would be up if we asked them, that they started with the bank and they've been in almost every department, if not every department. So
yeah, that's what makes great operations people, is you've been in all the different areas and you know how stuff works.
That's right. So I won't soapbox about community banking. That is what is community banking, right? Is those bankers know, and they know how to help. So awesome, Julie, thank you. And second but not least, I would like to introduce to you Executive Vice President and Chief Operating Officer of Southern Bank in Poplar Bluff, Missouri, one Miss Kimberly Katz.
Hello, how are you?
Hey, Kim, how are you? Good to see you.
Good to see you. I'm Kim Katz, Southern Bank. $4.6 billion, 60 plus locations. I didn't start with a bank because that moved me, I'd be over 100 years old, but I've been with the bank for 30 years over many different operational issues, frontline, retail, and stuff like that. So a pleasure being here. I hope what discussion Julie and I have with the team that's on the call helps them. And always, if they need any other help that we don't discuss, they can reach out. We're always willing to help other banks.
Thanks, Kim. That's great to say. And Julie, I know you feel the same. We've all talked about that. That goes for everyone on the webinar today. If you know PRI in any shape or form, you've heard us say we don't charge for phone calls and emails, and we never will. And if you do have any questions and they come up after this webinar or this discussion, please do reach out. Both Julie and Kim love hearing from fellow bankers. If we address something they're doing at their institution or that they're working on that you'd like to know more about, we can also connect you. But please do reach out. We hope this is informative, but we know we're not going to cover everything. It's near impossible. So great. Thank you both. Let's go ahead and jump right into the discussion. And we've got some prepared questions. We have some questions coming in, but let's start with a couple of our topics we know we want to address, which one is, and Julie, I'll start with you. Who is responsible for the debit card program or product at your bank, at Equity Bank?
So we have a card services group that lives inside of our operational unit. So they're really in charge over all of our debit card areas. They manage the program, they manage the cards. So we have that going on. And then we have a couple of subgroups that really work out of our customer care unit. We have a dedicated dispute team. So as customers call in and have disputes, it happens every single day. We put together a group of subject matter experts that we send those calls to. So, we've got experts that can work with customers on taking care of those disputes and resolutions along the way. And then we have a call center that really handles, along with our branches, that ongoing dialogue with customers on day-to-day issues with cards. So we've really taken the stance to kind of divide that debit card management into some different areas of the bank.
Yeah, that's great. Thank you. And Kim, how about at Southern?
At Southern, we have the same thing. We have a group for cards that reports to our project team. And we actually don't have a dispute department because we outsource our disputes to our core provider for debit cards. So they handle our disputes. We know how to handle them if we need to, but in-house, but most of them all are outsourced. Our resource center, which is our call center too, can take questions and answer anything that they have or anything they need. So that's kind of how we handle it today.
Sure. Yeah, sure. Thank you. And so, and Kim, did you, so when you went outsourced for dispute handling, is that a move you've made recently, or have you done that for a while, or?
We have actually done that for a while. There's a bottom line dispute. So if the dispute is below a certain dollar, we just basically kind of give the money back. We found that was a lot faster than just disputing every transaction for us. And then over a certain dollar amount, our core provider, our debit card provider, also handles everything else. So anything above $25 goes to them, and they handle for a fee.
Okay. And
they do the whole process, Mike. I ought to say, I mean, they actually give us give these people back their money today. It's within the 3-day credit period and all that. So they handle all the letters that has to be the whole 9 yards. There's so much compliance issues that we found that it was just easier for them to handle that than us.
Okay. And thank you, Kim. And for each of you, knowing about the support, the customer support, which is critical, and of course the disputes process, and didn't even know this myself beforehand that, one of you has in-house and handles disputes in-house, and the other, with a program and outsourced. And I know we have some banks that have considered, should they move it, or, do you let go of that? So I think that's very interesting for everyone. But maybe when we know we want to talk about contactless a little more in this discussion, so maybe we talk about it there. But I'm interested, just really quickly, if there were plastics change decisions, or you all were wanting to do something to your product set, your DDA set, and maybe tie card usage into that, is that something that would fall under you all? Would it be more of a team discussion, executive team discussion, or would that come from that same card services unit, Julie, or how would you all go about that decision-making process?
Yeah, so that process, I also have the digital strategy piece underneath me in strategic projects. So I kind of wear a lot of hats. So that would really fall into my area as you do some type of an evaluation looking at, card usage tied to products as we develop our products and services. We have a group, we have a senior leader of retail that would also be bringing that in. But every decision we make involves multiple departments because it's going to impact multiple departments. So a new concept like that would come in. Our card services unit would be part of that. I would be part of that. Our retail team would be part of that along the way to get that set up.
Very good. Thank you. And Kim, similar, I'm guessing.
I agree totally with Julie. It takes a whole team to make some decisions because sometimes back office thinks one way and the front office thinks another, and you kind of got to hash it out.
Imagine that.
That's right.
Find
That's right.
a good medium.
There's never any conflict between the front line and the back office. We all live in harmony, right?
Of course.
but it is, and as we joke, it is useful conflict though, right? I mean, there is, as Kim said, you have to hash it out because there are things we want to do for supporting in the customer, but there are also things we know on the product side and performance side that would be good for the bank and the customer, and we need to make those changes and have all the perspectives added. So yeah, very good. Thank you for that. And maybe we'll dip in more when we talk about contactless a little bit. So let's jump in. Maybe we'll move fraud to the top. And Candace, I'll get you talking. You said something very interesting about how, the joke that we love, of course, and a little flippant, but we love it. We use it all the time. You could stop all fraud by shutting down all transactions, but it is an absolute fact that we never have to tell any of our clients that they should try to reduce fraud because they're always under the industry benchmarks and what we use. And Candace, would you mind, before we get into asking both Julie and Kim how they track their fraud and what they look at, just kind of talking about what our benchmark is, specifically what that measures, that net of recoveries, and why it really isn't something to focus on.
Sure. Okay. So I use it. Not everyone at PRI actually agrees with me, but when I was at MasterCard, we used 9 basis points as a benchmark. I remember seeing numbers way above that, frankly. The industry has done a lot. EMV, of course, helped with fraud, but even a lot of the things for e-commerce, the processors and networks and financial institutions have done a lot to reduce and combat fraud. I'd like to give my quick example just to bring this home for everyone. So the fraud graph that I showed was a $1.6 billion bank on the East Coast. And we showed them, and I said, I and Mark, who works with me, said, your fraud's too low. And they all scoffed at me. Their risk group was like, I said, what does your risk group say? They said, well, this is great. What does your processor say? Our numbers are great. I said, okay, what's your false positive rate? And they didn't even know. And that's how many good transactions are declined in relation to how many fraudulent transactions you found. They ignored me for 3 quarters straight until their CEO went to make a purchase with his debit card and got declined for fraud. And the CEO brought out his credit card from another financial institution and stopped using his debit card, which is right what I had said was going to happen. So here's the good news. Next month, we're having a call with their fraud group, and the CEO has said, we need to do something about this. We're not serving our customers. So I was really happy. I'm not happy that he got declined, but at least, it's just, as an example, that's a real life example of how we can help make changes at financial institutions.
Yeah, thank you. And it's great perspective, Candace. And we talked about useful conflict and healthy debate, and many that know PRI probably can guess that we have a good bit of healthy debate internally all the time. And what I will say we agree on completely is because for many years, and really before you joined, Candace, and added your perspective from what you had seen, which was better perspective than what we had quoted several of the networks put out great, even the Pulse Debit Issuer Study. I know you've mentioned Pulse before, but there are issuer studies out there. It's highly respected, the Pulse Issuer Study, and they used to quote around 5 basis points. Now, that's a dated metric for sure, and fraud on the basis point net recoveries level is going up a bit, but either way, whether you use 9 or whether you use 5, we still don't have clients above those numbers. We still, all of our community banks are in the usually low 3 to 4 basis points of total spend. And I want to make sure to explain that too. Candace said it an easier way to understand, which is just the percentage of your spend is what we're tracking, but it's truly basis points of your fraud net recoveries. So what you're truly getting on the net recoveries, but against your total spend. So that would be all network stack. It would be all the dollars spent if you're MasterCard on MasterCard Maestro and your other network, or if you're Visa on Visa Interlink in the other network. Hopefully you only have one more network, but it is that basis points net recoveries against that total spend. And so that's another thing we always offer to say, if you want to reach out, we will free of charge send you an email about how we track it, what it looks like. And as we say, we love to share this information. The knowledge is important. So to do that, let's jump into the folks that have joined us to talk about that kind of stuff. And Kim, I'll start with you. How do you all track fraud? We have many banks that look at it just essentially as a total number against transactions or against their spend. But Kim, how do you all traditionally track your fraud and all that internally?
We track fraud based off what you said over the total spend and a percentage of basis points. Then our provider also tells us according to their peer group or who they're doing, so we can compare ourselves to them. We get a little more granular. We ask them a little more details, like, hey, yeah, that's just across your whole network, but we want banks our size, or we want banks in the Midwest. So we can kind of drill down a little bit more to kind of make sure we're comparing ourselves, not with just everybody, but like kinds, I guess. So,
yeah.
And then on the fraud front, we look at fraud daily. We actually have a girl in our department that runs it, and she actually can find some fraudulent activities. We found skimming devices in some of our areas before Fiserv even did. So if they're really into the data and into the fraud, they might be able to find something before somebody else does. So I highly recommend somebody to be able to look at the fraudulent transactions and maybe dive down on their own to find, hey, where did it come from, or what happened as well.
Yeah.
And to make sure everybody's looking at their rules as well, their risk rules. They should be looking at those, daily or monthly, and then have someone at the company that they're using also be looking at those to make sure they stay up to date. One change in a rule that really doesn't affect the whole group might actually save you several $1,000s.
Right.
That's probably more information than you wanted there, Mike.
It's great. And it's perfect. And to stay on those rules, right? Just because we set a rule now doesn't mean it's okay for the next, 60, 90 days or definitely beyond. We want to stay diligent on that. So no, it's a great answer. And you bring up a great point before I hand it over to Julie, because she may have a similar experience. But what we know is, because of how much work we do with Visa, MasterCard, the brands are a great partner in this stuff. They want to talk to you about what you're experiencing with your fraud. And when you say things like, we'd really like to know banks our sizes and or banks in our area, what we're experiencing, they have those numbers. They have those regional numbers and those peer group numbers, and they want to talk to you about fraud you just don't think about, or in certain circumstances, things you can do, right? And just all the other things you can do. So it's great. Your processors and brands are great partners in that, and probably many of you know that. So thank you, Kim. Julie, I'm guessing similar experience, but how do you all track fraud and who you work with on that?
Yeah, so similar experience, and fraud is ever evolving. Just when you think you've kind of got one step in front of them, it changes the next day, because they're pretty good at this. So, last year I started a dedicated fraud unit within the bank, not only for debit card fraud, but also for check fraud, ACH fraud, and every other kind of fraud that happens out there. So we've got a team that really is focused on it. They work hand in hand with our dispute team. So our dispute team is really that front line of what's really going on out there, because customers, as soon as they see something that's unauthorized, will alert us. We have kind of a rule of three. If we get three altogether from the same merchant in the dispute side in a very short period of time, we will open up an investigation, because that appears to be a pattern along the way. We're adjusting our rules constantly. As soon as you adjust one, they figure a way to backdoor it and do something else with you. So it's something we have to do. As you talk about your 8 basis points, we do monitor it over our spend, and it's part of our risk appetite statement. So as we've been looking at the thresholds we have in our risk appetite statement, Candace, you'll laugh at this, 8 basis points is outside of our threshold today. That's where all the red lights and everything goes on. And, as you get very reactionary to stuff and you start pulling back your rules to decline more things, I have had that experience where directors have called me on the phone and said, my son has been declined 3 times in a row in his card. You got to get this fixed. So it's such a balancing act in there as to what what do you open up? What do you stop for the fraud? It changes every day. So we are looking at our risk appetite statement to move that up, because I think 4 basis points is unachievable without just a total disruption in your customer base at that point along the way. And you're right, when you get declined, you immediately put your card back in your wallet and you go to something else, because it's kind of that reactionary. That's there. You have a bad emotion to that thing along the way. So it's evolving along the way. We try to stay on top of it all the time. The data analytics, we're still evolving that. We work with our vendors on it, but I'm listening to Kim going, ooh, there's a couple things there I need to write down because we need to do that. So it's evolving every day. So
yeah, she does that. When she goes, we all need to write stuff down.
I know.
So and that's just absolutely great. Thank you so much for that. And it's true. And I had heard, the way Candace talks about it, I had heard in early on in my career, it said another way that you really get 2 chances on false decline. The first one, you'll lose a nominal amount of customers, but 25%. I mean, this is growing too. Again, my knowledge is somewhat dated without being in the consulting world as much. But what I know now is they said you got 2. And by the second one, if you have a second false decline on a customer, you can guarantee they are not pulling that card again. In vast majority, they are not pulling that card again. So it really matters. And I see that we had one question come in that we can answer quickly. And it says, what are you seeing as a percentage of interchange income to fraud lost? And we can answer this pretty quickly. The problem is that interchange income is all over the place. Yeah. While fraud's going to stay relatively consistent on a percentage basis or the dollar amount, certainly based on size, transactions, card exposure, your region, that's all going to matter. But interchange, as Candace so mentioned, if you have the wrong network stack, your interchange could be literally half of what it should be. What we expect, we're hoping for something in the 90 to 110 basis points of gross interchange. And you're hoping for that fraud number. That fraud number is likely going to be under 5. So if you think it on 100 basis points of interchange income, and you think of 5 basis points as that ceiling that we all easily fall under, you can call it 5% or less. And it definitely is doing that again, if you're making the interchange you should be.
And I assume everybody on here, I get the quarterly, it's actually a monthly call from my CFO going, oh my gosh, look at how much you're writing off on fraud losses. And, you got to be able to have that conversation about, yes, and they're going to keep happening. Fraud is out there. So we just got to manage it. You can't eliminate it.
That's awesome. Candace, anything else on the fraud issue? We'll go ahead and keep going.
I think that we've addressed it.
Let's go. Yeah, that's good. It's fantastic. I know, and we know that topic's sensitive and interesting to everyone. So let's talk about contactless. Let's go ahead and get into that, because that's another one it's a very hot topic now. We talk about it on every single project we do. And Julie, I'll go back to you. Have you started issuing contactless cards?
We did. So we actually started a project 2 years ago with our vendor to start going to contactless. And our vendor, I think we just got into the vortex of a lot of banks all of a sudden wanting to do contactless, because there was just a delay getting on their schedule, and I was getting irritated and trying to get this out. So we finally started issuing in October of 24. It's funny how it's evolved over the last 2 years. We're in a lot of very small rural communities. And 2 years ago, I think the attitude in some of those communities was, well, we don't need it. And now the customer demand for it it's to the point you need to be issuing it, because if you don't have it, they're going to go somewhere else. And so we started in October. All new accounts and all new cards getting issued are going to contactless, and then any renewals along the way. We're trying to phase it in because it's a little pricey to reissue everybody all at once. But so yes, we've started that.
Yeah, fantastic. Thank you. Kim, how about Southern?
Southern started the contactless probably 4 years ago. So we are totally contactless by issue in the mail and by instant issue in the branch. So we have that project complete. The project we've just completed on that is digital issuance. I don't know if anybody is looking at digital. So we do digital issuance of our debit cards right now, and that's going over well. A lot of people don't even want the plastic anymore. They'll just take the digital issuance and go. We still send out the plastic because you never know when they can't find their phone. They still need a card, but most of younger generation especially would just rather have it on their phone and go.
Yep. No, absolutely. Yeah, and so I know we have a lot of clients and bank friends that are looking at a contactless now. Some have made the move, like you all have, and are going through that. But for those making the move, and if you don't have this, because I know we didn't prepare discussing this, but I kind of like to do that every now and then. Do you all have any idea on the excess cost of plastics from traditional plastics to contactless, or the increase? Because for a long time, PRI always says just monitor the expense, know what is a permanently new expense, right? And it doesn't mean it's not worth it. It just means we need to know that. And I think for a while we said we don't think the expense is worth it. And now we're fully on board and know that it is. So do you know, and Candace, feel free to step in here too, because I know you're dealing with this on your projects, but what is the increase in plastics cost on average that either that you all are experiencing at your bank or that we're seeing?
Tim, you want to start on that one, or you?
Well, I can start, but since we started 4 years ago, my numbers was probably skyrocketed.
Yeah.
Well,
So
we
I think
traditionally used to see around, in the $5 to $7 per plastic on traditional plastics. That's with chip plastics. It could get up higher depending, but I understand contactless is a little bit higher.
yeah, I would say on average it raised our cards between 90 and $1.40, somewhere in
Yeah,
there per card.
incremental.
Okay.
Yeah.
Yeah.
When I was at MasterCard, we always quoted $1.50 incremental. So that's interesting.
Yeah, and I think that's about what we're seeing too. We might be a little higher than that. I think it about doubled our card costs.
But
Just,
yeah, I think it just depends too how you buy your plastic. We buy big,
Yeah.
huge bulk plastics, and
Yeah.
we've been able to
Drive it
since
down.
we have a lot of acquisitions out there, our bulk is a little cheaper than what some people might get.
Great point. Great point. Yeah, so that $1.50, Candace, that's a good one to keep in mind too. And we know that when you're looking at your incentive agreements, or you're looking at your agreements with your providers, your brand, your network, your processors, they want to help you make that move. They know it's important. They know it's good for usage. They want your usage going up just like you do. So they're always willing to try to compensate to get you there. So that $1.50 is a great metric for everyone, I'm sure, that's listening in. So thank you.
Before we move on, Mike, I wanted
Yeah.
to say one more thing. Sorry. I had a banker say that their processor told them they had to be contactless by 2027.
Oh.
So just for all of you out there listening, contactless is not a requirement. I do think it's a very good suggestion, but it is not required. Sorry. End of sermon.
We like to correct the wrong we know we heard. Thank you, Candace. So I know we talked about an incentive agreement. There may be some on the call that still don't have an incentive agreement with Visa, MasterCard. You all are both MasterCard issuers, and you all are both principal members of MasterCard. But the question should be, you have an incentive agreement with MasterCard, and a sub question, how often do you interact with them for meetings? Are you having quarterlies, or do you try to do once or twice a year with them in meeting with MasterCard to discuss your program and things you can do and working with them to help? And Kim, let me start with you.
Okay. We are a MasterCard principal member. We switched a little over right at 5 years ago, probably. We used PRI to help us make that switch. It was a good transition for us. So how often do we deal with MasterCard? We have a rep that we can call anytime we're having any issues, and she supplies us with all the data that we want. We definitely have quarterly meetings, and sometimes with some of the fraud we might be seeing, we may say, hey, we need to have a meeting every 3 weeks to kind of keep us abreast of what might be going on out there. Or we just go back to the every quarter meeting to see what's going on. We do use MasterCard's advertising to help us in our advertising. So if you have a rep out there, MasterCard or Visa, make sure you reach out to them. There's no sense in reinventing the wheel. They have hundreds of stuff to look at too.
Yeah, that's a great point, Kim. And both brands are very good in helping. Again, they want to help you grow those transactions and have marketing offerings that are useful. So,
and I know, Mike, I'm just going to throw something back out there. I'm not sure if everybody on the call knows the difference between a principal and an agent. So if they don't know, they may want to reach out to you later to find the difference out.
Thanks, Kim. Appreciate that. Julie,
Yeah.
and you.
So similar experience. We're also a MasterCard member. We're also a principal member. of MasterCard. We have a great relationship with our rep there. I know our card services manager is in constant contact with her. I have the feeling we probably have the same one. Yeah. She does a fantastic job. So, you know, anything that we need, she's very available. We reach out to them. They provide us the data that we need. There's all types of different incentives out there that we can utilize them for to help, you know, help us with debit card usage. So it's really been a good partnership.
Yeah, that's awesome. Thank you. Yes, she does do a great job. And if anybody sees me looking over here, I'm just keeping track of time and questions. So no, thank you both for that. And MasterCard and Visa want to be helpful. They are doing a better job every year at trying to be partners. We want to help them do that. You two are very good at that. But you know, hopefully everyone listening that has a new relationship with Visa, MasterCard, or a new incentive agreement, the talk is real that they gave you during the presentations, or that if you were working with us that you got, they want to interact with you and help grow that portfolio. So let's jump to, I think probably we've had a lot of questions come in. I know we only have time for one or two more. Candace, I'm interested in going to the PIN networking and costs, but I'll leave it up to you. And I know that we had some questions we prepared. We've had some good ones come in. Where do you think we should spend our last 5 to 7 minutes? Do you want to do the network and costs question?
Sure. Yeah,
let's do that.
That's a good one. And by the way, I will try, and there are some questions that are very easy to answer. I'll try and follow up with those of you who have posed questions that we couldn't get to. Just have faith, and we'll have a discussion.
Yeah, I did see the one about limits, which I think is a great thing. We can follow up pretty easily on that with the spending limits. It's a good one. So let's talk about the PIN networks. And we know that while we're talking about MasterCard also offers, you're going to have 3 networks that are routing. Most of you are going to have 3 networks that are routing your card transactions, what we're going to call the network stack, whether it's MasterCard with their Maestro network that you utilize on the PIN side, and one other, and the other might be Pulse or NICE or Accel, Fiserv's Accel, Star, Shazam network. There are several others, but those networks, the other networks that Durbin, as Candace mentioned, that Durbin forced us to have, we have one of those 3, and those networks are not created equal. They work with Visa, MasterCard, or share with, or don't share with. They share with Visa, MasterCard for transactions, and they pay different rates. They also have different expenses, and this is something we like to identify in the industry because many aren't paying attention to this side of the card interchange and expense world. So Julie, I'll start with you. You have your PIN network. I know that I believe you use your processors network, but how do you track interchange in general, but the network income and the network costs, and is it a similar rep experience? I happen to know it's probably not, that you don't interact with that rep as much, but how do you deal with your network interchange and expense?
So we take, we get our invoices and we take a look at it, look at all the pass-throughs on there. I will say we had a conversation with Candace earlier this week as she divided this all out for us, and she immediately said, this one vendor, you need to send a term letter today to them because they're costing you way too much money. So it was really enlightening for me to see that laid out along the way. And so honestly, and looking at what we've done, I'm going to do a better job at tracking that along the way. I know it's really hard to get those invoices, and it's really hard to pick out what in the world is going on in there and what those pass-through costs are. And so, that information that we got from Candace, I've made some notes. We're going to track that a little bit better, because you're right. They are not all equal, and they all provide different service, and they all cost different. So.
Yeah. We of course, as always, with anyone we talk to, we hope to be able to help that tracking and getting that information is not easy for us. So we know it's not easy for you all, and that's our day job, right? That's what we do all the time. It's not easy to find it. It's usually in several locations, and you do have to kind of sift through things. What is this? What is pass through? What is markup? What's gateway, or anything else? So thank you for that. And Kim, same question to you. I believe you use your processors network as well, different processor, but pair that with MasterCard, and both the networks you all use are pretty good pairings with the MasterCard network stack. But so Kim, how do you all track that? Is it really through the Accel invoices and the card reporting maybe that you get on Fiserv, or how do you want to answer that?
Well, we have a manual process to some of it. So we look at it monthly and we compare it back to past history. So we may have all of our transaction data in an Excel spreadsheet and we say, well, this pass-through cost was $22 this month, and now it's $2,000. So we really pay attention to what is happening then line by line. And our Excel spreadsheet actually goes back a long time. So we kind of put all that information in there so we can see an anomaly pretty quick. One of the things that we do that on the bill basis, and that's not really broken out too much by uh, network. So that's one of the things that we have taken back through our PRI project too, is to break it out by network. Because what we're doing now is we get the bill in from the FISER, and like I said, we do each month and compare each line by line, and where's the income coming from, where's the expense going to, and are we seeing a blip? And there are times that we've seen a blip and we've called MasterCard and said, hey, we've seen a blip, and they said, yeah, that was an issue. You'll be getting a credit back for that. They understand it, and we can kind of figure out some of it on our own. Some of it we just got to call and ask.
Yeah. It's a great point, and you do have to stay diligent. And it's obviously partly why we're bringing it up. And one thing I'll say that we know we do when we work on interchange enhancement projects with our clients, bless you, Candace, when we work on those interchange enhancement projects, one of the things we do when we come in, we know we can enhance interchange in some way, even if it's only a small amount. There's little levers you can pull and things you can do. But one thing we know without fail is that we're going to expose some fee or some hidden section of fees. And it is 100% of our projects that was unknown to the bank. It is something where the inner workings of those costs, I don't think it's on purpose, but it's the complexity of interchange in general, the way those costs are layered, that they are just easy for them to be hidden in certain circumstances. So it's something important to stay on. I think it's great that you both do track it, that you have a way of looking at it, that you know where to go, that you have folks focused on it, and of course, stay diligent to it. So yeah, very good. I know we are close to time, and it's probably time to go ahead and wrap it up. So we got to not even half the topics or subtopics or questions we thought we might, especially as questions came in. So we know we could do this for a long, long time, but Julie and Kim, to both of you, as we've said already, but I want to make sure to say again, thank you so much for your participation, your engagement, and your partnership. I think also thank you for your offering to anyone on the webinar that you are more than willing to hear from them and share your experiences. And I think that's just great. The best thing that banks can do is to connect and talk about the challenges you're experiencing across the board. So fantastic. We really appreciate it. Candace, as always, awesome job. Really love it. Thank you for the presentation. Is there any closing remarks you wanted to make before we sign off?
Just one thing, I saw some questions come in on MasterCard invoices, which is a totally different topic. So I really will follow up with all of you, Lori and Janet and others. So just bear with me, and we'll have a chat. But thank you, all of you, for listening. Thank you for the claps. That made me feel better. Appreciate it.
Yeah, and same. I love the call outs. I saw some questions from Jason and Patty and some others too. So we will follow up. Thank you, Candace, very much. Awesome job as always. Again, thank you, Julie and Kimberly, and thank you to everyone for your participation. And until next time, we'll see you.